Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 03100583339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, if you're a homeowner, you've probably got some equity in your home. Do you have debt that you need to get rid of? Well, give us a call. Let us take you through that blended rate calculator that I always talk about. Let's determine if it makes sense for you or if you should keep what you have. How do you do that? Well, book your phone consultation. Go to our website at mortgagemomradio.com and you can book your call right there. Once again, that's mortgagemomradio.com. Hello and welcome. I am Debbie Marcoux. I am the Mortgage Mom, and you guys are watching Mortgage Mom Radio. We do this show once a week. Every Wednesday, we are live on YouTube, Twitch, and Facebook. So whichever is your favorite platform, please feel free to follow along. We have big changes to FHA. The announcement just came out today, and I am super excited about it. So where before we used to try to get you into a conventional loan if we could, it would have a little bit lower mortgage insurance, but gosh, FHA had so much better of an interest rate. Well, we have got big changes in that mortgage insurance department, and we are going to be talking about that today. So stay tuned, don't go anywhere. I want to remind everybody that this is an interactive show. If you have questions, I want you to ask them. I want you to go ahead and type them right into the feed, and I'm going to answer those questions for you. I'm going to read the questions out loud and then answer them so that you can hear them. This is great. I love it when you interact. I love it when you guys are part of the show, because every question that you have is answering somebody else who is listening the same question that they may have as well. So by you asking your question, you are helping everybody. It also helps me with content, of course. So if I can answer your questions, that definitely helps me, because it helps me to provide the listeners with what they want to hear. It helps me provide you to answers to those questions that you are hoping to get. So please be interactive. Let me know that you're here. Say hi, put those questions into the feed. As I mentioned, there's big changes to FHA. They just announced it today, so I'm super excited about that, since it is my normal Wednesday to go on, and I get to bring you that information first. So please stay tuned. Don't go anywhere, because those are big changes. Super excited to announce them. Heather did jump on. She says, hi, everyone. Karen jumps on. She's my mother-in-law. She says, hi, gives me a big, huge heart. Karen, thanks for joining in. Heather, thanks for being part of it. Heather was actually very helpful in the announcement came out this morning. So I was obviously running, dashing, trying to make sure that I had the information to provide to you. And Heather actually created a chart with new monthly payments that I can reference while here in the studio for you guys. So that was fantastic. Thank you so much, Heather. I do want to remind you guys that we do loans. My office does loans. All the girls that work for me, they do loans, and we would love to help you with yours. So if you have any questions whatsoever, please call the office. Get yourself an appointment. Most of the time, there is somebody that is available that can take your call immediately. If you're calling on a weekend, please make sure to leave your name and telephone number in the main voicemail answering machine. We will make sure that somebody does call you back within a couple of hours at the longest. So we are here to help in any way that we can. I can see that Gus jumps on. He says hi. Fair Lady jumps on, says hello all. So I love that you guys are all getting in on here. Gustavo says, great to see you again. Gustavo, thank you so much for joining in. Claudio jumps on and she says, hello, can't wait to hear the exciting announcement. And I haven't forgotten that I need to call Heidi back. Claudia, I love that. Please make sure that you reach out to Heidi. She will get all of your questions answered and make sure that you are moving in the right direction. So once again, this is Mortgage Mom Radio. How do you guys get an appointment to talk with us? Again, call the office. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That is how you call the office. You can go to the website, go to mortgagemomradio.com. There is an appointment button right there on the website where you can actually book your own appointment for a day and time that works for you. So that is perfect. If you do not see a day and time that works for you, all I ask is that you just click on that contact us form on that website. Let me know when you work and when you are available, and I will make sure that if I don't call you myself, that one of the girls on the team does call you, and we make sure to work around your schedule. Now, I can't promise I can get somebody to help you at 2 a.m., but definitely if you need an early morning appointment, a 7 or 8 a.m., or if you need an evening appointment, 7 or 8 p.m., that is absolutely no problem whatsoever. If you want to know when I go live so that you can be part of the show, you can interact, you can ask your questions, especially for those of you who are listening by podcast or radio or maybe watching this YouTube at a later date. All you have to do is the same phone number for everything, but text the word mom to 844-935-3634. Just the word mom, not opt-in, not anything like that. Just the word mom. That will get you opted in, and you will get one text message a week when I go live so that you can click the link and join and then be part of the show. So Dora jumps on, says, can't wait to hear the news. So I guys, I'm like actually beaming. I'm so excited about this. I have brought you episodes about how are we, Mortgage Mom, going to help you guys to make things more affordable. FHA is one of my absolute favorite loans to write. They have much less, they're not as strict, I guess is the easiest way to say it. They're not as strict on your debt ratio. They're super forgiving on your credit score, very forgiving with bankruptcies. We talked a little bit about that in last week's show. They are just it's a phenomenal loan, but it does have a little bit higher mortgage insurance than a conventional loan would have if you have a really good credit score. So conventional is going to be better if you've got a super high credit score. At least it was better. But now today I'm feeling like FHA is still probably the way to go. But a conventional loan, if you had a high credit score, but you still only had a 3 or a 5% down payment, that was the direction that we wanted to take you because the FHA mortgage insurance would have cost you more in your monthly payment. Now, FHA is known to have lower interest rates than a conventional loan. You're getting in with 3.5% down, but that mortgage insurance was expensive. So the big announcement that they made was that they are dropping the monthly mortgage insurance premium so that it is lower, and that in turn is going to help things be more affordable for you when you are repaying that monthly payment. It's going to help you qualify for a little bit higher price. It might help you get into a higher price mortgage, or I'm sorry, a higher price sale price with that monthly payment that you were hoping for. So it is really, really cool. We're going to go through all of those numbers to give you an idea of how much that they dropped it. They actually did us a major service. So if you've been thinking about buying a home, you have a low down payment, if you've been thinking about refinancing your property, but you've got kind of a lower credit score, FHA many times is the direction that we want to take you. And now this is the direction that we're going to probably always want to take you unless you have a big down payment or a lot of equity in your property. So if you have that 20% down or you've got the equity in the property for the refinance, then conventional is still going to probably be better. But if you don't have that equity and you are looking to buy a property with, 3.5% down, a lower down payment, even 10% down, this FHA is going to be a lower interest rate and the mortgage insurance is going to be very comparable. So super duper exciting. Let's see. Heather jumps on. She says, I am super excited about the new lower MI rates. This can help buyers qualify for more now. So super excited, and helps with FHA refinancing too. And it does. So if you have a current FHA loan and you have been thinking about wanting to try to drop the monthly payment, give us a call. They will allow you to do a streamline refinance to get that lower mortgage insurance premium to help you to get that monthly payment reduced. Now, we do want to look at your current mortgage, and we do want to make sure that by putting you into the streamline refinance with today's interest rates, that you're still going to save monthly payment, right? So if your current interest rate is super, super low, even with the mortgage insurance premium dropping, a refinance may not be the best decision. That may not be the direction that we want to take you. But if you have purchased a home anytime, I would say since, let's go back. I would say July of 2022, so last July, if you have purchased or refinanced a home with an FHA loan, you should do not stop, go. Do not stop. Don't keep going to go. Do not pass go. That was the word I was looking for. Do not pass go like the Monopoly game. Pick up the phone and call us. Let's talk about a streamline refinance to see what we can do. So with that, I'm going to tell everybody, hold tight. When we get back, I'm going to start reading off to you guys how these changes will affect you. How much are we seeing in savings? And we're going to talk about all that good stuff. I'm going to continue to read the questions that come into the feed, and I'm going to answer them for you. So stay tuned. Don't go anywhere. We'll be right back.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Have you been thinking about buying your first home and you just don't know where to get started? Well, book a phone consultation with either one of my loan officers or even me. How do you do that? Well, go to our website. Go to mortgagemomradio.com. Right there, you'll see a book phone consultation and get on the books. Talk with us. Let's get you started from beginning to end. We'll walk you through that process. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
All right, I want the attention. I am calling out to all my sneakerheads, my hat men, my Funko Pop guys. If you like collectibles, if you like sneakers, all the Nikes, Jordans, Adidas, Asics, New Balance, if you are digging on those baseball caps, all those My Fitted, Sports World 165s, the hat clubs, all the great styles and brands, we have got them at runawaysoul.com. We have got the best pricing in town. We match those of the big sites like StockX and GOAT and eBay, but we don't have any seller fees. Everything we carry is guaranteed authentic. We have free shipping and it's fast. You're talking a couple of days to get your product. So run on over there and check it out. It's runawaysoul.com and make sure that you use one of our discount codes for even lower pricing. Once again, that's runawaysoul.com. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. You guys just heard our commercial for Runaway Soul, so help us out, support the family, go check it out if you guys are big sneakerheads, you guys like those collectibles, those Funko Pops, the Hot Wheels, and baseball caps, guys. We're into spring season right now, and everybody's getting ready to go out to those baseball games, so check it out, runawaysoul.com. And so back to FHA, right? I'm talking about how they are reducing the monthly premium for the mortgage insurance. It is a big, giant difference. A couple of things that have changed. So number one was with anybody at all, and all of you in LA can understand this, especially because we're in a more expensive area here in California, especially LA County, Orange County, San Bernardino, everywhere, right? It's just more expensive here. It's an expensive area to live, expensive state. So when you get into a mortgage where the loan balance was over $625,000, the mortgage insurance premium was significantly higher than if you had a loan balance that was below $625,000. They have actually changed that now, and they are bringing that number up. So that is very nice. They're going to bring that up to $726,000 before we see an increase in the monthly mortgage insurance instead of the $625,000. So that was one of the changes that they made that was very, very helpful. Number two, The old monthly mortgage insurance premium for somebody that was purchasing over that 625 limit used to be 1.05%. Now, that doesn't make a whole lot of sense to you, especially if you're not real familiar with how mortgage financing works. What does 1.05% mean? But I'm going to give you some examples so that it does make sense. I'm going to do the calculations for you, but they have brought that number down to 70% or 75. So it's like 0.70 instead of 1.05, right? They've brought it down quite a bit. And let me give you a couple of examples with that. So for example, if your loan balance being over the 726 is 750, the old mortgage insurance that you would have paid with 3.5% down payment would have been $656 per month. Today, you would pay $469 a month. That is almost $200 different. I mean, we're talking $196 or something like that. I'm not doing the math. I don't have a calculator, but we are almost at $200 a month that it is saving you in the monthly mortgage insurance when you're in that high balance arena. $800,000 would have been $700 a month if you had the 3.5% down. It is now $500 a month, so it is exactly $200. And $850 would have been $744, and now we're at $531. So again, see how that would help you to either qualify for more or be able to possibly look at a little bit higher sales price, trying to stay within that comfortable sales price budget that you're trying to maintain. I have a lot of clients who will actually qualify for more than what they're willing to purchase. Even though I could get them approved for a higher sales price, they want to keep their price down because they are looking for a particular monthly payment. So I've got, for example, a client right now that says, I don't care what I qualify for. What can I buy to keep my payment at $4,000 a month? That is his budget. That's the number that he wants. Well, to keep him at that $4,000 a month with the FHA loan with 3.5% down, he was also looking at a condominium with pretty high, monthly HOA dues, $375 a month. So there's really no way for you guys to do a backwards calculation, but I'm just kind of giving you an example. His number was really about $475 to keep him comfortable at that $4,000 with the taxes and the insurance and the HOA and the mortgage insurance and everything built in. He is now at $525. So for him, for his personal situation, it made a big difference from $475 to $525. That's $50,000 in sales price that he can now be looking at the next higher arena to try to find himself where he wants to live and find properties for sale. So big, big, big difference. Now, going back to those loans that are under 726. Those loans used to have mortgage insurance of 0.85 per month. And again, I know you guys don't really understand what that means. More than happy to do a one-on-one with you and explain it to you and take you through the calculation if you'd like. But the monthly mortgage insurance premium on FHA was at 0.85. Now, to give you an example, that's with 3.5% down, loan amount before under 625, now under 726. But before, going with the exact same borrower, like I mentioned earlier in the show, going with the exact same borrower, 3% down, property, 600,000, let's call it, great credit score, 740 credit score. The conventional loan mortgage insurance would have been closer to somewhere around 0.5. So yeah, we want to try to get you into that conventional loan if you're going to pay 0.85 in an FHA. However, FHA had lower interest rates. So we'd have to look at where's the rate today on one, where's the rate today on the other, where's the mortgage insurance on one, where's the mortgage insurance, and figure out which loan program worked best for that particular person. Well, now FHA has brought that number down to 0.55. So it's going to be very, very comparable to what that conventional loan mortgage insurance would be. So now we've got the opportunity of the lower interest rate and very comparable mortgage insurance to keep that monthly payment lower. So again, I want to give you guys some examples. How does this change a normal person's monthly payment? So for example, a loan amount of $600,000. The old mortgage insurance at 0.85 would have been $425 per month. The new mortgage insurance at 0.55 is $275 a month. Again, that's for a $600,000 mortgage. 650, the old would have been $460 per month. The new is now $298 per month. Big differences, you guys. You can see how this is going to help you make your payment more affordable or help you go up in sales price to keep the same payment, or maybe even help you go up in sales price because now you will qualify for more than what you could before. A $700,000 loan prior would have been $496 a month, and it would have actually been higher than this. Heather did this spreadsheet for me very quickly, but at $700,000 previously, you would have actually been in that really high 1.05 instead of the 0.85. So now at 700,000, that monthly payment is only $321 per month for that mortgage insurance. So it was probably about 600 previously and now 321. So it is a big difference, these changes that they've made to try to help people to find some affordability during these trying times. Again, interest rates are high. You know, everybody's got this inflation. We've got prices super high at the grocery stores. Gas is getting high again. Our gas bills at home just to heat our homes have been, unreal. So FHA is stepping up to the plate, and I absolutely love it. And they are helping to make things more affordable for you, which is fabulous. I can now offer you this program knowing that I'm not only, giving you the same mortgage insurance monthly, but I can also offer you the program that is going to give you the lowest interest rate that is also available. Heather says, I forgot they raised the limits too. So yes. But Heather, thank you. That was so helpful to be here in the studio and to have that information at my fingertips to be able to read off to everybody. So once again, who does this help, right? I did mention at the very beginning very quickly about a streamline refinance. And I did tell you that if you've purchased a home anytime since July of 2022, so if you bought a home anytime, mid last year, all the way through to today, and you have a current FHA loan, you really do want to pick up the phone. You want to go to the website. You want to do whatever you need to do to get yourself an appointment so that you can talk with us about possibly looking at doing a streamline refinance. We can drop that monthly mortgage insurance. And again, we are going to take our time with you. Make sure you have your mortgage statement in hand, or you have access to log in online from your phone, put us on speaker, open it up, look at it. But we need to know what your current all-in mortgage payment is. We're going to ask you to give us the breakdown of your escrows because we want to be able to calculate for you. Yeah, sure, it's great if we can lower the mortgage insurance. But if the difference in current interest rates today doesn't help because you're going from a 3% to 5.75% or 6%, then obviously we're not going to have you move forward with that streamline refinance. Now, who else would this be good for? So if you've recently gotten a conventional loan and you've got a high interest rate, you might want to call us and see what FHA might look like for you today if you are paying mortgage insurance. So really anybody with mortgage insurance would want to reach out and call and talk to us. Now, not to mention all of you out there right now that have pre-approvals. You are out actively, aggressively looking for homes. You are trying to find that next property that you want to buy. This would be a perfect time for you to call and double check your pre-approval. Make sure that you've got your most accurate numbers at hand, because I can tell you, you heard the difference in these monthly payments for these loan balances that I provided. You are going to be able to qualify for more if the monthly mortgage insurance is lower than what it was when your pre-approval had been completed. So make sure that you do reach back out. If you have, a lender that you're already working with and you love that person, that is fabulous. We want you to be where you're comfortable. But if you're not getting this information firsthand, they're not picking up the phone and calling you and saying, hey, great news, things changed, let's rerun those numbers, and you want to talk to me or you want to talk to one of the girls on my team, we would absolutely love to have you. We would love to have you part of the Mortgage Mom Radio family, and we do want to give you that information that you need. So again, everybody out there listening, if you've been thinking about buying a home or you have a current FHA loan, and you got that FHA loan, whether it was from a purchase or a refinance, anytime I would say mid of 22, mid last year, all the way up until just, within the last couple of days, give us a call, because this is just going into effect with brand new loan applications and rate locks as of today. I do want to mention that today is, what is the date today, Mikey? Today is February 22nd, February 22nd. So if you are listening to this show at a later date, because this does go to radio and it is behind, we're probably about a week behind to get the sound over to the station. So if you're listening to this, this was February 22nd that this information came out. If you want to stay up to speed, you want to stay in the know, and you want to know about it right away, then that is why you watch the show when I do it live. It's every Wednesday. I start right about 1 o'clock, and I send out that text message with the link so that you can jump on and join and be part of the action. So once again, how do you get that link to make sure that you don't miss the show, so that you can interact and you can ask your questions? Well, you're going to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Just the word mom, nothing else. Just the word mom. You don't have to put opt-in or anything like that. Just mom. And it is a computer automated texting service that will just add you to the list of the text messages that do go out when we get the show started with the link to join. Now, if you want to call my office, same exact phone number. We try to keep everything consistent. So same phone number to call the office. It's 844-935-3634. Once again, that's 844 We Lend for You. WELEND and the number 4. Now, if you're sitting there and you're thinking to yourself, I'd really love to understand FHA more. I keep hearing people talk about these FHA loans, but I don't really know what they're all about. So join my workshop. I am going to be doing my next workshop on March the 11th. We're going to start at noon. It is a Saturday. It is going to be via YouTube. If you would like to make sure that you get that link to join, it is a completely separate link. You will not get a once a week text message to let you know I've gone live. You will only get the one link right when I get started on YouTube with my home buyer workshop. Again, that is March the 11th at 12 p.m. So the way to get that link to know that I got started and to be able to learn everything that there is about all of the different loan programs is to text the word workshop, and it's all one word, workshop, to, once again, the same telephone number. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. I can see I've got a couple of comments that I haven't gotten to, so we are going to take a super quick break. When I get back, I'm going to start reading questions and answering them. So start throwing those into the feed right now while I get myself a glass of water, and I will be right back.
Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom.
Mortgage Mom here. Hey, have you been thinking about doing some home improvements or renovations to your home? Well, property values are up and interest rates are down. Why not explore whether that's something that you can do? How do you do that? Well, get on the books. Get a phone consultation with us. What do? Go to mortgagemomradio.com and book your appointment right there. That's mortgagemomradio.com.
She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
All right, I want the attention. I am calling out to all my sneakerheads, my hat men, my Funko Pop guys. If you like collectibles, if you like sneakers, all the Nikes, Jordans, Adidas, Asics, New Balance, if you are digging on those baseball caps, all those My Fitted, Sports World 165s, the hat clubs, all the great styles and brands, we have got them at runawaysoul.com. We have got the best pricing in town. We match those of the big sites like StockX and GOAT and eBay, but we don't have any seller fees. Everything we carry is guaranteed authentic. We have free shipping and it's fast. You're talking a couple of days to get your product. So run on over there and check it out. It's runawaysoul.com and make sure that you use one of our discount codes for even lower pricing. Once again, that's runawaysoul.com. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and every Wednesday right here live on YouTube, Facebook, and Twitch, I'm bringing you all of the updated information about all things real estate and mortgage. And today we're talking about the changes that were just announced this morning with FHA. We are super excited about those changes. It is making things more affordable for new buyers and for refinances. They have lowered the mortgage insurance premiums. They have increased the loan amount that you can get those lower premiums at. So tons of changes. If you missed any part of the show, go back to the beginning and watch it, re-listen to it. I give you guys some great information about how much in savings that you would have based on your loan size. It looks to me on average for anybody who's got a mortgage of about $500,000 and above that we're seeing about $200 in monthly savings, which is huge. I mean, $200 is $200, especially when your gas bill to heat your house is like $300 or $400 these days, especially here in LA. So definitely go back and listen to that part. And if you have questions, you want to talk to us direct, you want to see how either purchasing FHA or refinancing your existing FHA loan might be able to help save you, then all you need to do is call the office. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You want to be part of the show? You want to ask your questions in the chat? You want to know when I go live? Text the word MOM to that same exact phone number. If you want to be part of my workshop on March the 11th at 12 p.m. Pacific Standard Time, text the word workshop to that same exact phone number. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So Karen jumps on. She says, great news. Karen, yes, it is. I absolutely agree with you. I'm super, super excited about it. I now have a loan program with lower interest rates and great mortgage insurance monthly that I can put people into. And not only that, but FHA, like I mentioned at the beginning of the show, is so much more forgiving. It's more forgiving on your debt ratios. It's more forgiving on your credit history, on your credit score, on your credit past. You know, we mentioned in last week's show, if you missed that part, somebody asked me about Chapter 13 bankruptcy. And they said, you know, I was told that I can't get a mortgage after my Chapter 13 bankruptcy. And I don't remember what the amount of time was that he had mentioned in the chat in that show. But I believe that he thought that he had to wait 3 or 4 years from the time that the Chapter 13 was discharged. Now, for many of you who don't know what a Chapter 13 bankruptcy is, it's a reorganization of your debt. So they take all of the debt that you owe, you go to the court and you say, I don't want it just wiped clean. I'm not filing a Chapter 7. I want to pay back what I can and I want to pay back what I owe. And the court will actually assign you either a 3-year, 4-year, 5-year repayment plan, and you will start to make monthly payments, which will then be dispersed. You make it to the court, it gets dispersed to the creditors, and it pays the creditors back, sometimes all of their debt, sometimes some of the debt, some of it gets discharged. But when you do a Chapter 13, it is looked upon easier with softer eyes than a Chapter 7 bankruptcy would. And so with FHA, if you have had a Chapter 13 bankruptcy, even if you are still in the middle of your payment arrangement, as long as you have 12 months paid on that payment arrangement, you've made all of your payments on time, and you can prove that to us, you do have the opportunity, assuming that your credit score is okay and your income qualifies and everything, but you do have the opportunity to purchase a loan and get approved, or purchase a home and get approved for a loan. Conventional loans are not going to allow you to do that. So FHA, again, is just way less strict. It's more forgiving. I like to call it the do-over loan for people who have had problems in the past. Even with a Chapter 7 bankruptcy, their waiting times from the time that it's discharged are much, much shorter than conventional loans. Foreclosures, again, much, much shorter periods of time that you have to wait than what you would with a conventional loan. A foreclosure, for example, is 4 years with FHA. but it is 7 years with conventional. So I do love an FHA loan. I love that it's 3.5% down payment. So it's going to help those first-time buyers who need to scrape together the money to come up with the down payment. And now our mortgage insurance is going to match that of a conventional loan where somebody's got a super high credit score. You're now going to be able to take advantage of that. And I do like that FHA does not have a scale. So the mortgage insurance with a conventional loan will go up based on and down based on your credit score, your debt ratio. So, what is your debt ratio? What is your credit score? What kind of property are you purchasing? The mortgage insurance is kind of like car insurance, if you think of it that way. Like each individual person is going to shop for the insurance and get a different quote than the last person. With FHA, everybody gets the same quote. Doesn't matter who you are. Doesn't matter how good your credit is, how bad your credit is, what your debt ratio is. You could be literally at the top of the scale, the highest debt ratio that FHA is going to allow, and you are still going to get the same monthly premium. So I do love FHA loans. I think that they get a really bad rap a lot. I don't know why. And now with the mortgage insurance, that very comparable to a conventional loan, it is my absolute favorite other than a VA loan. The VA loans, I absolutely, those ones are phenomenal. But not everybody is a vet. Not everybody is active military and has, the option of a VA loan. So for all of us normal people that did not serve our country and do not have the ability to get a VA loan, FHA is by far one of the best loans that we could possibly put you in. So Local Trucking jumps on. He says, good afternoon, Local Trucking. Thank you so much for joining. Really, really appreciate it. I love when people come in and watch the show. Fair Lady says, what is the lowest credit score I can have to do an FHA loan? Actually, so the FHA will allow a credit score down to 550. And I kind of touched on this a little bit last week in my show. We really want to see that you have about a 580 credit score. Just because FHA has their guidelines, then the lenders that are giving you the loan, they have their own guidelines. And so not every lender is going to open it up to take on the risk of somebody with a credit score as low as 550, which also then makes it more difficult to find the right place to put the loan. It's hard to find the right bank that's going to allow it. Then when we can find that bank that will allow it, the interest rates are extremely high because of that low credit score. Credit scores are what determine your interest rate. The better your credit score, the better the interest rate will be. All interest rates are risk-based. So if your credit score is a 550, the interest rate gets really, really high. So we do like to say 580 because we have way more options of banks willing to write the loan. We've got much better interest rates at 580. But if you're under 580, we can talk about what a rate would look like. We do have banks that will do it. So I'm not telling you that we can't. We can. But we can also take a look at your credit and we can determine if there's anything that we would recommend that you do in order to raise your credit score so that we can get you into those better interest rates and that better financing. If you get to a 600 credit score, the interest rate will be phenomenally better than a 580. But let me just tell you that the difference between 550 and 580 are also night and day. So 580 is doable. 600 and above is a much, much better, more forgiving as far as the interest rates go. So I hope that answered the question, but if you have more questions, please keep bringing them to me. Goldilocks jumps on, says, what is the lowest down payment I can do with FHA? So the lowest down payment is 3.5% with an FHA loan. So that is going to be their lowest down payment, unless you actually look into down payment assistance. Down payment assistance depends on where you live, the county that you're in, the city that you're in, what state that you're in, who's got the down payment assistance programs, and how do those programs work. Down payment assistance, you still have your main FHA loan as your funding, but then you are getting a second loan, sometimes a third loan, to try to help you make up the difference of the down payment. The interest rates are not as great. They do raise the rate when you use down payment assistance. There's a lot about down payment assistance that is fabulous, and then there's a lot about down payment assistance that we don't like. So I do always tell my clients that if they have a way to get to the funds without utilizing down payment assistance, they will have a better monthly payment, they will qualify for more, and they will not be upside down the day they get their keys in their hand. So remember, if you do an FHA loan and then you get down payment assistance in a second or a third, so you get another second loan or you get two more loans, a third loan, you are going to end up owing more on the house than what you bought it for. And so you end up upside down from day one. So I don't like to see that happen. If you've got any other ability to come up with it, whether it be out of your retirement, your 401k, maybe you've got a cash balance plan, maybe you've got deferred comp, maybe you have something that you could go to pull the funds, you're definitely going to get a lower interest rate on the mortgage. You are going to get a better monthly payment. You are not going to be upside down. So, but those options are there. But standard straight FHA guidelines is 3.5% down payment. So thank you so much, Goldilocks. That was a great question. And again, like I mentioned at the beginning of the show, I love it when you guys ask me questions. It really does help me to, number one, keep the content moving in the show. But number two, it brings the information to the listeners that they're looking for. So I'm guessing half the time. I'm sitting here in this chair and I'm giving you guys information, but I'm guessing as far as what it is that you want to hear. Am I answering all of the questions that you have? Am I doing the job, right? Am I getting it done? Are you guys walking away feeling more confident and better about possibly taking that leap into home ownership or picking up the phone and calling us about doing a refinance? So the more questions that I get, it really does help me. And I guarantee she had that question and somebody else was also thinking it. So we have definitely answered numerous people's questions all at the same time. So thank you, Goldilocks. That was awesome. Let's see. My dad loves to jump on. He is by far my number one fan. He says, "Hi, sorry for being late, but was hooking up the sink to my now basement kitchenette." Dad, thanks so much for the update. Really super appreciate that. And all my listeners need to know my dad's hooking up the sink. But I do have to say, my dad is definitely a handyman. He has built his home from the ground up himself. And I love it when he tells me what the heck he's doing, because it's nice to hear. So thanks, Dad. Thank you for being my biggest fan. I love it. Hugo says, anything new on HELOC? So this is, I'm not exactly sure what you mean by anything new. So if you could maybe give me a little bit more detail to go off of. I don't know if your question is, are there new lenders, or can we go, can we give you more out, or like, so just kind of give me a little more significant question there. And I'm more than happy to read it and answer it out loud. So Goldilocks says, thank you. Can I use a gift from my parents for down payment? So that's a great question, and you can. So FHA will allow you to use a gift as your down payment. It will also cover your closing costs. The seller can cover your closing costs. That is one thing about FHA that is also significant, is the amount of money that they will allow as a credit towards your closing costs is higher than most conventional loans. So many of the conventional products are capped at about 3% that you can get from the seller. Some of them will let you go higher. Some of them will let you hit that 6% mark. But FHA will always allow 6%, getting a credit from a seller. So you might be thinking, oh, cool. Well, it's 3.5% down, and then closing costs are usually about 2%. So that's 5.5%. So if I ask the seller for 5.5 or 6%, then I don't have to come in with any money. So it doesn't really work that way. It's actually different than that. So no matter what, you, the borrower, needs to bring in 3.5% as your down payment of the sales price. Now you can get that down payment as a gift. So yes, parents could gift, sister could gift, an aunt or an uncle could gift, a fiance could gift. So if you're wondering about somebody who's going to offer you gifting, again, you can just call us and ask us the question if it would be allowed. But you do, as the borrower, no matter what, whether it is a gift or your own funds, need to be able to bring in that 3.5%. Now, the seller can actually pay up to 6% to cover your closing costs. Well, why would somebody want to ask for a big, huge credit from a seller If the closing costs are only, like I mentioned just a minute ago, about 2% of your sales price, why would you ask for 6% or why would you ask for 5%? So the reason for that is that right now, we all know, we've heard it 150 times, that interest rates have gone up, right? Interest rates are definitely higher than where they were. The lower the interest rate that you get, the lower the monthly payment is. The lower that monthly payment is, the more that you will qualify for. Higher sales price, higher monthly payment. So it's going to help you to qualify for more. It is going to help you buy a bigger property and keep the monthly payment low, right? So you can pay points to buy your interest rate down. If you're trying to scrape together your 3.5% down, or you're getting a gift for the 3.5% down because you don't have the savings available, you're probably not going to want to pay 2% in closing costs. So what does that 2% mean? So let's say that you buy a house for $500,000. That's 10 grand. About $10,000, about-ish, is about what your closing costs would cost you for a $500,000 sales price. If you wanted to pay points to buy your rate down on top of the closing costs, that $10,000, then you would also be paying additional money. You can pay 1 point, 2 points, 1.5 points, a quarter point. You can pay whatever points you want, 3 points, 4 points, to buy the interest rate down to a lower level. But again, you probably don't want to pay those points out of pocket, since you're trying to scrape it together to get it done, to get yourself into the home, make a move, pay for moving costs, right? Turn on all your utilities, get your refrigerator stacked with brand new food. So what you want to do is, when you make an offer to a seller, you're going to want to ask for 4% in closing costs, for example. 2% is going to cover the regular standard fees, and another 2% is going to help you to buy your interest rate down lower, which is going to help you make your monthly payment more affordable at a higher sales price. So I hope that helps. But it was a great question. I do appreciate it. And keep them coming, you guys. Keep them coming. Armando says, haha, way to go, Dad. Yes, I love it. He's always fixing something. He's always redoing something. I love it too. Let's see. Heidi says, hi, I'm here now. Sorry, I'm late. Heidi, that's okay. We love it. Michael jumps on, says, just a quick hello. Michael, thank you so much for joining. I love it when you do. You've always got good questions. And Hugo says, any new low interest rate on HELOC? I have a credit score of 750 and was told 10% interest rate for me. Doesn't seem that that's a good deal, too high. So Hugo, let's talk a little bit about home equity lines, because you are right. 10%, if not higher now. Equity lines of credit, you guys, and HELOCs are the same thing as an equity line of credit. A HELOan is the same as an equity loan. The difference being that an equity line of credit, or a HELOC, is an adjustable line. You make a payment that is interest only. The monthly payment that you make does not pay it off. It only covers the interest. So if you make the minimum monthly payment for 10 years, what you borrowed day one is what you owe on the 120th month. Okay. So a home equity line of credit can be used, paid back, used, paid back, used, paid back. So think about it like a credit card that is tied to your house. Now, I'm going to urge you to pull a recent credit card statement. What is the interest rate that you are paying on your credit cards today? I guarantee that it is significantly higher than where it was 2 years ago, 3 years ago. That is because the Federal Reserve continues to increase the prime rate. The equity lines of credit are directly connected and tied to the Federal Reserve prime rate, just like your credit cards are. So every time the prime rate is increased, the interest rate on the lines of credit go up. So whether you're shopping for a new line of credit and you're calling for a rate quote today, or you secured a line of credit 2 years ago, you have all seen the interest rates go up. You have all felt the minimum monthly payments go up, and they all look like bananas right now. The interest rates are very high on those home equity lines of credit. and they're not going to come down anytime soon. The Federal Reserve, I always do a show about the Federal Reserve and the prime rate and the increases every time they make an announcement. The last one that I did was about 3 or 4 weeks ago. There's probably another one coming up before the end of March. But, every time that they raise it, and they have already said that they are planning to raise it again. So it is not slowing down. It is not stopping. So yes, unfortunately, I have no good news for you as far as, are there any home equity line of credit products that have started to offer lower interest rates? The answer is no. They are adjustable mortgages. And the reason I say mortgage is that they are a second note, a second trust deed tied to your property. So it is very much like a credit card, but you are securing that credit card with the equity in your home. But you can use it. You can pay it back. You don't owe any interest on it if you have zero balance. So they are a great product for somebody that just wants a safety net, somebody that wants to have something that they could go to in case of an emergency. Let's just say that you had to repipe your house and you weren't expecting it. It was $5,000-$6,000. You can literally go there, get the cash, do the repiping, and then you can make payments on that and make sure to add more than what the minimum payment is that is due, just like your credit card, in order to pay off the balance. But if you're thinking about doing something like a big home improvement and you're going to need $50, $60, $100,000 plus to do these renovations or home improvements, equity lines, they're going to get very, very expensive, and they already have, but they're going to continue to get more expensive and more expensive and more expensive. So you really might want to just consider a possible refinance. That might not be an option right now either. And maybe the best option is to just sit tight. But the best thing that you could do is call the office, talk with us, give us your numbers, tell us what you owe on your mortgage currently, what is your house worth, what is your current interest rate, how much cash are you looking for, and we can definitely go through those opportunities with you so that you can try to make the right decision for you. Everybody has a different decision based on their personal situation, their personal circumstances. So the best thing that could happen is to make an appointment or call the office and talk with one of us and let us do what we can do to help you. I hope that answered the questions on the HELOC, but again, keep them coming. Happy to keep answering them and make sure that you guys get all of the information that you're looking for. And then Armando says, good question, Hugo. So yes, I agree, Armando. That was a great question. I love it. And again, you guys can always do this with me live. Ask your questions, get interactive. It really does help. And trust me, there are many, many people that are out there listening to this show, listening later by podcast, listening later by YouTube, listening by radio in a week or a week and a half from now when this airs. And you are helping them and you are helping me to deliver a better show. So I thank you very, very much. So how do you guys get a hold of us here at Mortgage Mom Radio? How do you call the Mortgage Mom? So it's the same phone number for everything. I'm going to run through that with you guys one more time. You probably already know it by now because I say it 150 times, but I am looking for you guys to give us a call to work with us and to help us give us business. So I do want to make sure that I give you guys that number. So call the office, text the word mom, text the word workshop. Okay. You can do all three things with the same phone number. Workshop will get you a link on the day of the next home buyer workshop, March the 11th at 12 p.m. Pacific Standard Time. We will be doing another home buyer workshop to help everybody that has been thinking about buying a home to get the knowledge that they need. If you want to opt in so that you can watch the show when I do it live, get interactive, ask your questions like Hugo, ask your questions like Armando, ask your questions like Goldilocks. You've got to do it when I'm doing it live. So again, same phone number for everything. You can call, you can text workshop, or you can text mom. Mom will opt you in for that link once a week so that you know when we go live. That number is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So we want you to call us. Why would you call us? Based off of today's show. So number one, if you don't own a home, we got to get you pre-approved and we got to get you ready. Number two, if you are ready and you've been looking for homes and your lender hasn't called you to tell you that you might qualify for more now that FHA made these changes, hey, pick up the phone and call Mortgage Mom. Let us see what we can do with a pre-approval to help you to qualify for more. If you have a current FHA loan and you are paying that higher mortgage insurance premium, which you are, if you have a current FHA loan, you are paying the higher premium. But I would say anybody that obtained an FHA loan from about June of 2022 until today. Again, today is February 22nd. I had to ask my son what the date was as I'm sitting here in the studio. But if you have gotten an FHA loan and you've closed on it, whether it was a refinance or whether it was a purchase, from June of 22, July of 22-ish in there through today, your interest rate is probably very similar to what you already have, but your mortgage insurance will be lower, and we can do a streamlined refinance to help save you on your monthly payment. So we can definitely bring that payment down. Streamlined refinances are so easy. We're going to take your application. We're going to pull your credit. Sometimes we don't even have to pull credit. We're going to verify your income with a verbal phone call, but we're not going to get pay stubs. We're not going to do an appraisal. We're not going to do anything crazy. It is a very, very simple process. It just brings your monthly payment down. So I hope that I helped you guys. I hope you enjoyed today's show. I hope you guys jump on again next Wednesday and do this with me live and keep asking all of your questions. I'm Debbie Marcoux. I am the Mortgage Mom. And one last plug, my family started a brand new business. It's called runawaysoul.com. And if you're a sneakerhead or a collector, you guys like those Funko Pops, those Hot Wheels, and you like baseball caps, it's spring season, check out our website. It's runawaysoul.com. We hope you guys all enjoy your day. And let's see, Michael actually jumped on really quick. She says, sorry to catch your show late. I appreciate your time. Michael, again, thank you so much. I really appreciate all of the views, and I appreciate you guys on and asking your questions. So with that, I hope you guys have a fabulous rest of your week, and I'll be here again next Wednesday. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.